welcome to today's report, the 1st of October 2024. Okay, so what's in store for us today? Right, today I'd like to talk a bit with regards to the strong third quarter earnings from Alphabet, right, Inc., and give you a detailed performance review what has happened so far, because this particular stock here, Alphabet Google, is being currently being traded. It's part of the report. So it being part of the report, I think it's also important to see what is the long-term view of this particular stock, right? Now, Alphabet Inc., the parent company of Google, delivered better than expected results for the third quarter of 2024. This is driven by significant growth in its cloud computing division and robust advertising revenue. The company reported that its investment in artificial intelligence are beginning to pay off, resulting in a nearly 6% surge in price during after-hours trading. After the report was out, right? Then so far, how's the Q3 earnings? I think that is crucial for everyone to understand. You have the chart right here, right? The diagram. The total revenue was 88.27 billion. Year-on-year growth was 15.09% compared to 76.69 billion in quarter 3 2024. Okay, so you can see it from here where I got the data from. Net profit 26.3 billion, year-on-year growth 33.6%, beating the forecast of 22.8 billion. Earnings per share is $2.12, a growth of 36.8%, exceeding analyst expectation of $1.85. So this was the result. Now, Alphabet's digital advertising business remains a key revenue driver, generating 65.85 billion, a 10.4% increase over the period year and slightly above the analyst forecast of 65.5 billion. YouTube's ad revenue grew by 12.2% to 8.92 billion, driven by part of US election-related spending. Now, as this election finishes, then they do expect that to drop, because this one you have the election because of the elections, right? So search revenue reached 49.4 billion, reflecting a 12.2 billion year-over-year growth, though it showed signs of slowing compared to earlier quarters. So let's dive in detail. I think it's crucial also to look at the revenue by business segment. Now, digital advertising performance. Alphabet's digital advertising sector remains its primary revenue driver, showing steady growth across multiple platforms. Total advertising revenue increased from 59.65 billion in quarter 3 2023 to 65.85 billion in quarter 3 2024. Okay, that's a 10.4 year-on-year growth, surpassing analyst estimates of 65.5 billion. Now, YouTube advertising year-on-year revenue grew by 12% to 8.92 billion, slightly exceeding expectations of 8.89 billion. The growth was partly fueled by increasing spending, like I mentioned earlier, tied to the US elections. Now, if you look at this chart right over here, while data reflects growth, the year-on-year increase remains relatively modest. This is with regards to the advertising revenue. And I think you can slowly see where I'm heading to, because of the challenge that YouTube may face in the future. The US government wants to break it up, right? So they are actually attacking, the way that the YouTube does its business, especially the ads part of it, right? Now, quarterly growth shows even more sluggish. You can see over here, this is the growth year-on-year. It's pretty modest. The growth is like, this is 3%, and it dropped by what dropped, and then this is like increase of 1%, increase of 1%. But if you go on a quarter-on-quarter basis, right, you can see even it's really sluggish, indicating a slowdown in momentum. Now, search business revenue reached 49.4 billion, a 12.3% year-on-year increase, reflecting consistent growth. However, as Alphabet's core search business begins to mature, it's not to say this is not good, but this is signs of a maturing business. The company is increasingly focused on diversifying its revenue stream. Now, fortunately, a good development is seen in the form of Google's cloud performance. And that's what I want to really share today. The focus right now. Now, looking at the cloud computing growth, it's a total different kind of story over here. Alphabet's cloud computing division continues to grow rapidly, helping the company offset the slowdown in its core search business. Cloud revenue surged 35%. Early on, you've been seeing it's just like in the teens, where now we are talking more than 20%. And in fact, Q3 2024, we have a 35% year-on-year to 11.35 billion, outperforming the forecast of 10.8 billion. Now, this growth reflects strong demand for AI-powered solutions as businesses increasingly turn to the cloud platforms for AI development and infrastructure. Now, Google Cloud quarterly growth has been consistently outpacing the advertising and search growth as well. CEO Sundar Pichai emphasized that Alphabet will continue expanding its infrastructure by investing in servers, TPUs, GPUs, and data centers. These efforts are not only driving cloud revenue, but also supporting Alphabet's long-term vision to balance its business portfolio and reduce reliance on search-related earnings. Right? So this is definitely in a right direction, showing result right now. So if you were to talk about a conclusion, a strong performance in Alphabet's cloud computing business could play a crucial role in mitigating risks associated with US government antitrust scrutiny of its search and advertising operations. With the potential of search earnings to slow in the future, Alphabet's growing cloud division offers a reliable, scalable source of income and a diversification of revenue resources. This is really, really important. Yeah. So despite ongoing regulatory challenges, Alphabet's advertising business has demonstrated resilience. This maintains its current momentum, and the how Google's earning is being broken down into is the entire thing is known as a service. So you have a cloud, you have a cloud growth, and you have stable service revenue. If Google successfully navigates, this is definitely going to enhance investors' confidence. So Alphabet's ability to balance these segment positions is well to attract further investments and sustain long-term growth. That's my take of it. And that's the reason why later on when I share the charts, you could see that there was a huge gap up in the price of Google. Okay, so that's the report for today.